when did you discover the ability to self-direct? Because I'm sure you were doing it before you started directed IRA. So where did that hit you? How far back?
Yeah, I had my first client that wanted to buy real estate with their IRA in 2006. And I was like, what is this guy talking about?
Yeah.
I'm like, you can't do that. And Mark, my law firm partner, at the time, he had done he'd had maybe 10 or 20 clients do it. And he'd heard of a couple companies that did it. And he's like, no, you can do that. You can do that. But I was just blown away at the idea you could do that. And I thought, this is a very cool strategy. Why don't people know about this? Once I started helping a few clients, I realized no one's good at this actually as a professional advisor, lawyer, CPA, financial advisor. There was nobody really great at it. No one had written a book about it. There are some trust companies and banks offering the accounts. And so I decided I'm going to be the number one expert in that field. My idea at the time was I'm going to write the number one book, which is what I did. And that's the Self-Directed IRA Handbook. It sold 60,000 copies now. The National Association of my industry uses it for certification training, credentials in the self-directed IRA space. Government regulators buy and use my book. Most of my competitors use it to train their employees.
Yeah.
So it became like kind of the Bible in the industry, which I'm proud of. But the writing the book was because I did the 10,000 consults. So once I started helping a few clients buy real estate with their IRA, then that started blossoming to thousands of clients that I'd helped and investing in startups or doing an oil and gas deal or investing in crypto or investing in a small business or pre-IPO stock or a private fund. And I started getting in and learning all this stuff, which is fascinating to me, actually. It was very just interesting because I loved all those different asset classes and learning about them. So yeah, that was my thing. I just became the guy on self-directed IRAs and we built a team in our law firm around it that helped clients do that. And then I just realized, all these companies I'm sending my clients to go to their IRA accounts aren't that great. And that's a great business though. I should go do that business rather than being a lawyer billing hours all day long. So that's the kind of the genesis of where it came to directed IRA that we started, like you mentioned, at the end of 2018 was really out of a need I didn't think the current providers offering self-directed accounts were very good. They weren't good enough for what I thought for my clients.
Yeah, no, you're 100% right. I've been involved in self-direction myself for, yeah, going back probably about the same time that you're talking about, the early 2000s, and the experience is catch as catch can. It's sometimes so, but it seems to be has been a difficult code to crack for a lot of companies that I guess have great intentions and they certainly want to create a business. But I'll just speak on behalf of my experience and the members of my community of Freedom Founders have really enjoyed the high level of customer service that they have received. And I think that's the earmark of any good company. Yes, you can have all the great education and all the whiz bang, we can do this, but if you don't have someone there that can actually grease the wheels, because there's some level of work on behalf of the individual investor who wants to self-direct. That's what it's about, right? It's not just putting your money in public stocks, which certainly has a place, public markets. This is what we're talking about here. And you mentioned a number of the alternative assets, starting with real estate, which is probably the gorilla. But there's all these other alternative assets that you mentioned too, oil and gas and crypto and commodities and metals and
Yeah.
just a lot of different aspects that people can invest in. And that's what self-direction is about. Let's talk a little bit about this direction that we're seeing, the trend of those who are becoming awakened to alternative assets just as a class by itself, but also because it can be utilized within the retirement accounts and have the tax benefits there as well. What are you seeing in the trends? When did people really start to look at alternatives and who is looking at alternatives from your standpoint?
Yeah, this is where it gets really interesting because there's two different things happening at once that are great for our business and for our clients and customers. One is there's $40 trillion in US retirement accounts. And about every 10 years, that number doubles. It's insane, right? I remember when I got in this space, it was like 8 trillion and it's now $40 trillion. So it's a significant number. And that's where a lot of Americans just have their investable assets and they continue to put more and more money in them. And the largest bucket of that 40 trillion, a lot of people think is 401Ks. It's not. It's actually IRAs. There's more money in IRAs than there is in 401Ks now because a lot of people roll over prior employer job, the baby boomers, they've built a lot significant retirement accounts. So most of it's sitting in IRAs. So that's big because that's where most Americans have a lot of investable cash. That's one trend that I think is important. That could be for a lot of people listening right now. It's just like, yeah, I got quite a bit of money I've stocked away in my retirement account. The other trend is just alternatives in general. And we had you at our alternative asset summit, did an incredible job. And as you know, one of the things I talked about there is if you look at wealthy people, like ultra high net worth people, how much of their investments do they have in the stock market, public equities, versus quote unquote alternative assets like real estate, private equity, small business, oil and gas, like that type of stuff? It's like 85% alternatives, 15% in the stock market. And if you look at that's the ultra high net worth people, they only have like 10 to 20% of their investable assets in the stock market. Then you look at people who are below $1 million of investable assets, they're the exact opposite. They're like 80% in the stock market and 20% in alternatives, and it flips. And so if you look at that, well, what are the wealthy doing? Where are they allocating their money? They're not putting it in the stock market. Maybe that's how they became wealthy. Maybe
Mhm, mhm.
they know something that the rest of us don't. But that's something I've seen is a lot of our wealthier clients. This is even as a lawyer, and then as I got into retirement accounts, is they liked these other alternative assets. They liked betting on things, and betting maybe not the best word, but they liked investing on things that they felt could have a better return than just what the stock market's going to perform. So those are just the two big trends: alternative assets, particularly with the wealthy. And I think the mass affluent too are getting way more into alternative assets. We're seeing that. And then retirement accounts in general continue to be a tried and true place where there's now $40 trillion to be invested. And it doesn't have to buy a stock or a mutual fund.